Today is such a beautiful day. The weather is amazing, the light is beautiful, nature, the birds are in the air. It's such a beautiful day, and I had to take advantage of this weather and make a video in the nature. Yeah, the topic I'm going to handle today is a topic that everyone needs to have an information on before 2024, because it's an issue of taxation, and that is rental income tax. The issue of rental income tax is quite an important one, and everyone needs to understand rental income tax before 2024. It's one of those important information that one ought to have. Yeah, and if I'm to talk about rental income tax, what it is, yeah, it is charged on anything that you rent that is stationary. What do I mean? If you have a building doesn't move, it's stationary. If you have land doesn't move, it's stationary. If you have a billboard that is stationary in one place, it is liable to rental income tax. So what I'm trying to say is that rental income tax is collected on anything that is stationary that one rents out. That is by the landlord, of course, and then is rented by the tenant. Yeah, so that can be a billboard, it can be a house, it can be land. As long as it's stationary and you're renting it out to someone else for the purpose of earning some income, for the purpose of earning some money, that property is liable to rental income tax. And that is exactly what we are going to look at today. And then it's very important for us to know that rental income tax is only charged annually, once a year. Yeah, so it's charged on, let me say you have a property and that property earns you a certain amount of money monthly. Yeah, so rental income tax is charged on the income you've got from that property for a full year. Yeah, you calculate and total up that income that came from that property for a full year, and that is what URA will consider for rental income tax. So how does this happen? So the first thing you have to do, if you have a property you're renting out and you need to pay rental income tax and you don't know how to go about it, the first thing you have to do is apply to register for a rental income tax. And how do you do this? You go to any URA office. URA, of course, is the tax body in Uganda. You go to any URA office and you apply to register for rental income tax. Now, after registration, you will be requested to file returns. Yeah. Now, when you file the returns, of course, all this that I'm talking about will be explained to you in detail when you visit any of the URA offices. So when you file the return that you're going to file will have the amount of money you have to pay for that particular year. And not to forget, rental income is charged the total amount of rental income you've received for that particular year. Yeah. So the year for URA for taxation begins from 1st of July to 30th of June of the next year. So this is 2023. If the tax year began on 1st of July 2023, it will end on 30th of June 2024. So it's a period of 1 year. So the total amount of rent that you've collected from that property that you're renting out from July up to June, that total amount is the one that URA will sum up and then consider for rental income tax. Much as URA charges rental income tax, it is very important for us to understand that it does it in 3 categories, and that is the individual category, the partnership category, and then what it calls the company category, but has a lot within it. It has institutions, it has registered bodies, entities, it has NGOs, it has basically registered entities, yeah, which is not an individual or a partnership. Yeah. If we are to understand the individual rental category, in this category, rental income tax is charged on properties that are owned by individuals. Let's say me as an individual, I own a property, yeah, and the income I get from that particular property, URA has to charge taxes from it. Yeah, it's an individual, one person, an individual, a name, Frankina. Yeah, so if I own a property, the rental income tax that is charged from that property lies in the individual category. The second category is the partnership category. In this category, rental income tax is charged from properties that are owned by a partnership. They are individuals, but they are in some form of partnership. Yeah, the income that is got from this property that is owned by these individuals is shared. That income is shared between the individuals. Yeah, for example, let's say a husband and a wife, they have a property, and the income that comes from that property, they share it either in the same ratio or in different ratio. Let's say 2 to maybe 3 or 1 to 1. That means they are sharing it equally. But if they are not sharing it equally, maybe 2 to 3 or 2 to 6, whichever ratio they choose to share the income in that category, that income that is got from this property, the rental income tax that is charged from it is in the partnership category. The thing with URA is if you're to file returns, you file returns per TIN number. That TIN number either has to be owned by an individual or an entity, a registered entity, like a company or an institution. In this case, if the property is owned by a partnership, yeah, it's owned by maybe 2 individuals who joined income and bought a property. If that is how this property is, it's not by one individual and it's not by a registered entity, it's a partnership. That means whatever income that is coming out of that property, it has to be shared. And if they are filing returns, each one of them has to file returns, because you cannot share a TIN number as individuals. If you joined money and bought a property together, each one of you, in order to file for rental income tax, has to have their own TIN number that you are able. Look at the third category. The third category is the registered entity category. Here is where we find the companies, the institutions. Basically, we find the registered entities in this category. And let me give an example. If Makerere University owns a piece of land and they would like to rent that piece of land out, the income that Makerere University will get from this property will be charged differently for rental income tax compared to the individual one and the partnership. I would like us to look at how rental income tax is calculated. And remember, it's calculated differently for the individual, it's calculated differently for the partnership, it's calculated differently for the registered entities. Let's look at how the rental income tax is calculated.
So let's take this example and see how the individual rental income tax is calculated. Remember, our rental income tax is an annual total collection of all the rent you've got for a particular year. Yeah. So for the individual calculation of the rental income tax, we'll begin off with the threshold. Threshold is a constant amount. Yeah. It's always, for individual, it's always 2,820,000. And if the annual rental income is 2,820,000 and below that, URA cannot tax you for that year, yeah, for the rental income tax. It can only charge you amounts that are above that threshold, yeah, because URA understands that as you're running a property, you incur expenses, security, cleaning, repairs. They are expenses that you incur as you run the property throughout the year. So they put a constant amount of 2,820,000 together for every expense that you could have incurred as you are running that property during that particular year. So what will happen is we need to calculate and get the chargeable rental income, which URA will charge, yeah? So you subtract the total annual rental income. Let's give an example. If it is 30 million, that for a particular year we worked, and our rental income from the property we rented out was 30 million. So you have to subtract the threshold from that 30 million, which is going to be 30 million minus 2,820,000. In example A, you can see we get, after subtracting that, we get the chargeable rental income is 27,180,000. So now from the chargeable amount, we can now calculate our what? Our rental income tax, which is always a constant of 12% of the chargeable rental income. So we are going to get the 27,180 times the 12%. And if we calculate that, we get our rental income tax for that particular year as 3,261,600 shillings. So that becomes the amount that URA will take as the rental income tax for that particular year. Yeah. So that is for the individual category.
So let's look at the second category, which is the calculation of the rental income tax for the partnership category. So because partnership, they are individuals, they are not entities that are registered or company organization. So it takes the same process for the individual category, but up to a certain stage, yeah? Let's look at this. So number 2, we are looking at partnership, as you can see in this example. The threshold still remains the same. It's a constant for individuals, like I told you. So here it will still remain 2,820,000. So let's take the same example of 30 million as the annual rental income for that particular year. So it will be annual rental income of 30 million. So into brackets A, example A, the chargeable rental income will be got by subtracting off the threshold. Like I told you, URA cannot tax you on amount that are below the threshold and below. So we have to subtract off the threshold, which will get 30 million minus 2,820,000. We'll get 27,180,000. So if we are to calculate the rental income tax in example B, the threshold here, of course, remains the same, like I told you, 2,820,000, but the percentage that has to be charged from the chargeable rental income is 12%. So it's still constant. 12% is constant. So to get the rental income tax, we have to charge 12% of the chargeable rental income, which is 27,180 times 12%, where we get 3,261,600, yeah? So as I told you earlier on, that in the partnership category, the income they are getting from the rental collection is divided between the husband and the wife. That is if the partnership is between the husband and the wife. So we are giving an example. This is not a constant value. Let's say the woman gets a ratio of 2 and then the husband gets a ratio of 3. Yeah, that means the husband is getting more than the wife. Let's see how this calculation goes.
So let's look at the calculation of the partnership with the ratios. Yeah, we said the ratio is 2 to 3 and wife, husband. Yeah, so that means the wife is earning less of the rental income collected than the husband. So in calculation of ratios, we have to first get the sum of the ratios, so that the sum is always the denominator, yeah? Then the ratios are the nominators. So here we'll calculate the wife's rental income tax, which is 2 divided by 5 times. Remember, our total rental income tax for the husband and wife is 3,261,600. So times the ratio, which is ratio of 2 divided by 5 times the rental income tax that was collected, yeah? So for the wife, what the wife has to pay URA is, it will be 1,304,640. Then for the husband, we follow the same procedure, the ratio of 3 divided by 5 times the rental income tax, which is 3,261,600. When we multiply that, we get the husband's rental income tax will be 1,956,960. So that is the calculation of the partnership category.
So lastly, let's look at the rental income tax calculation for the registered entities, which entails companies, institutions, basically registered bodies. Yeah. So let's look at that calculation. In this example, let's take this example that we are seeing of Makerere University. These figures are not the real ones, they are just estimated ones. Yeah, let's say Makerere University has some properties they are renting out, yeah? And their rental income for that particular year is 250 million. So for Makerere University, the threshold for registered entities is always 50% of the total annual rental income, yeah, which is half of the total rental income collected. 50% is half, as we all know. So if we are to calculate the threshold, it's going to be 50% times the total annual rental income, which is 250 million, yeah? So if we are to multiply that, it equals to 125 million, which is the threshold, the 50%, which cannot be charged like I told you. So the chargeable amount here will be the total annual rental income, which is 250 million minus the threshold, which is 125. So that we take 125 as our chargeable rental income. So if we are to now calculate the tax is 30% of the net rental income, which is going to be 30% times our chargeable rental income, which is 125. So if we calculate that, we get our rental income for Makerere University for this particular year as 37,500,000. So as you can see here, that is the example for the registered entities, which is normally the institutions, the companies, the corporate bodies, all those registered entities take this example. So as you can see in this example, the 37,500,000 is our rental income tax in this example of Makerere University. Yeah, so that is the calculation. Thank you.